We want to be in the business of creating value for clients. We don't want to be in the business of selling product. From early 21 till about spring or summer of 2022, we spent mostly a lot of time setting up the organization. So as you may recall, the front part of the business or the investment part and some of the distribution people came with the initial transaction. What we were missing was operation, compliance, finance, accounting, middle office, systems, IT, all of that. And we took over a year to set up everything, which is quite long, but we had the luxury of time and we wanted to set up something high grade, institutional, global in nature. So we put, in my opinion, best of class systems, structures, etc. We started hiring all of the heads. From spring mid 2022, we started seeing new inflow of business, clients like National Bank, who has been a long-term supporter and partner of ours, joining, and then we started seeing other institutional clients come in. And today we're sitting at almost 40 employees, most based out of Montreal, but we have some employees in the US and in the UK, but most are here. We're running out of space in the office, which is incredible after 3 years. And we so far have just crossed 30 billion Canadian in direct business. I'm just excluding the legacy PR business, which is crazy and way beyond our wildest imagination. So very excited. We want to be in the business of creating value for clients. We don't want to be in the business of selling product. PineStone is meant to be a focused organization that does one thing or a few things, but it does them really well. We're not trying to be everything to everybody, and it's essentially impossible. And if that means we have limited growth or limited clients or limited size, then that be it, really. We're here to compound client capital. And by the way, all of our money is also invested in the same strategies alongside clients, which is a big deal for us. So I personally have most of my money invested in the strategies. So in a nutshell, the style is one of private ownership focused on capital compounding. So I'll explain it. We're interested in investing in high quality companies from every aspect of quality, from a financial perspective, as well as from a culture, structure, governance, transparency, ethics, etc. These are businesses that we find are not only have something special to them, but they also are well run and ethically run, so to speak. And we are very confident in putting capital in them. And once we find these businesses, we tend to be invested in them for the long run. And by long run, I'm talking 10 to 20 years in general, which is a little unique in the public space. Most investors in the public space tend to transact, which is normal because the public space gives you liquidity. We think of it as private investing in a public setting, which means, we own X amount of that business instead of owning 100% of it, but we think of it as owning a business versus owning a stock. And we get the liquidity as a free added bonus. So it's a little bit of the best of both worlds. And I think that consistency and focus is what allowed us in the past to, generate this nice track record, mixed with an obsession of capital preservation. So we really don't want to lose money, and we want to consistently make money. We usually don't make a lot of money all of a sudden. So you would most times be hard pressed to see the most exciting stock in the fund. Unfortunately, we're still waiting for that day to happen at some point. But usually a lot of what I call singles and doubles for those that watch baseball. Consistency with a very strong capital protection. And that combination creates a tremendous amount of value over time.